Oh yes, it's another beautiful day here in Jacksonville, Florida. I'm Brian Marsh. When you buy a home, chances are you're going to get a mortgage. But how does that happen? Well, here is home loan consultant Kelsey Clowers, and he's going to tell you exactly how the process works in clear and understandable terms.
So the first thing we want to do is get you pre-qualified. And the things that you're going to want to have for that is just some basic information about your job history. Know the dates that you've worked for places, know how your income incentive was set up. And I'll walk you through that process of things documentation-wise that you need. W-2s, a pay stub, those are things that are helpful to have, but those are things that we can get after we've had an initial interview. And then from there, after we've gotten you pre-qualified, we want to take that next step that gets you into underwriting. Underwriting is a step where we're going to take all those financials and documents that I've asked you from, and it's going to get you approved. And it's going to take a lot of the stress that happens when you're under the contract to buy that first house. We're going to take that stress away because we're going to get all the underwriting part taken care of. As a loan officer, we're skilled in making sure that things fit within the parameters of lending programs. But the underwriter is going to be the one that actually verifies the income of the documents. They're going to look at the bank statements for any, eligible assets. If there's things that we cannot use, they're going to come back and say, here's what we have, here's the lending guidelines, and they're the ones that are ultimately giving the stamp of approval that this loan is good to go. Because when you're getting an offer for a house, they will know, has an underwriter actually vetted these documents, or am I just trusting the loan officer that's incentivized for doing this? But if I go by the underwriter's approval, and that's why it's important to get that next step, is now I've got a stronger offer when I go under contract for a home. You're going to have expenses when you're a first-time home buyer. You're going to pay for an inspection for a property. You're going to have some out-of-pocket money that goes towards buying that home. And before you spend any money, you want to do the due diligence and make sure that you're good to go to buy that home. Because the last thing anybody wants to be is in a situation where they've spent money hoping this is their dream home, and we just miss a step in the lending part. So that's why it's so important the lending part is done up front, is so that we've checked all the boxes and we go with full confidence that when we found that dream home, that we're going to get approved to buy it. I would say setting safe expectations to a time frame that everybody's comfortable with. Usually 30 days is a pretty reasonable time frame for a FHA, VA, or conventional loan.
Great information. Thank you so much, Kelsey. And if you'd like to know more about how to get a loan, call Kelsey Clowers or me, Realtor Brian Marsh. I'd love to hear from you. Thanks so much for watching Property Perspectives with Brian.